Awesome. Well, welcome everyone, and I hope you all had your afternoon coffee. I certainly needed it. Well, on stage, so I'm Priscilla. I work at the SDF, and on stage I have here with me Alex, who's the founder of Slender, Ulexi, co-founder of Iburo and Trilobyte, and Amit, who is the CEO of XLR Labs. So one thing they all have in common is that they're building lending and borrowing protocols on Soroban, and also some other interesting projects. And so that's why we're here, to talk about their experience and then also hear their insights into the lending and borrowing space. So, but before we dive into their projects, we'll have each of them introduce themselves and maybe a tidbit on how you got into the crypto journey.
Sure. Hi, my name is Alex. I'm the co-founder with Slender, which is the compounded lending protocol on Soroban. We've been building it, I guess, since June. And actually, my background, I'm engineer in applied mathematics by training. I'm in crypto full-time since 2016. I've been involved in multiple projects. My team was always building DeFi, like various DeFi primitives on various blockchain ecosystems. We've been building also on Polkadot. We are running a Parachain over there, and right now we're building on Soroban as well. It's a really exciting journey since everything is just kicking off. And I hope I can highlight some more details on our developments in the course of today's conversation.
Awesome.
Yes, thanks. My name is Ulexi, and I'm the founder and CEO of Iburo. Iburo is a virtual services provider based in Lithuania. However, we are doing a new project on Soroban, which is called Trilobyte, which is a cash flow cash flow finance protocol. And my background is in IT. So before getting into Soroban, our whole team has been developing different projects on Stellar as well. So.
I'm Amit, and I have spent over 12 years in traditional finance, working at places like Millennium Management, Barclays, and Bank of America, in commodities exotics trading and RMBS trading. I came to crypto in 2018, built an asset management firm, and then became head of trading at Abra, where I managed more than $300 million in assets on various DeFi protocols. Beginning this year, my team is working RWA asset tokenization platform on Stellar, and lending protocol on Soroban, where these assets can be used as collateral. We'll talk about it later.
Awesome. So you guys are the brains behind your projects. I think some of you might have seen their projects in the SCF rounds and demos earlier. But for those who missed it, tell us a little bit about your projects, what problems you're solving, and how you're incorporating Soroban.
Yeah, I can jump in. Yeah. So we built pretty straightforward. We built money market, which is more kind of I would say curated in terms of assets being listed over there. It's actually similar from the user perspective, similar to what other compounded markets offer, like you name it, Aave, Compound, and others. We have a few differentiators which help us outstand compared to these sort of contenders. First of all, we support portfolio of assets as collateral, which makes a lot of sense in terms of risk management. So you can compose your basket to make sure that you're comfortable with the risk level you have in your position. And another feature which I guess makes a lot of sense is like specific risk-focused approach to pricing, which makes interest rates on Slender more effective and more manageable from the perspective of borrowers, because they affect them directly by either combining different, less volatile collateral baskets, or let's say providing, or let's say deleveraging their position if needed. And also we support flash loans, which I guess quite important feature for bootstrapping DeFi ecosystem somewhere where it never existed before. Because access to flash loan liquidity is quite important in certain use cases within DeFi, and we've seen a lot of, it's not only like flash loan attacks, but also there is a lot of other kind of things that you can potentially do with that. But yeah, so that's what we are building. We are kind of looking forward into delivering more use cases. I'm sure that we will be more aligned in the future with the overall vision of Stella, which is more focused on retail use cases like, fast payment transactions, more retail users coming in. So hopefully at some point we can introduce undercollateralized loans once we can manage to integrate DID solutions and, having like sort of scoring system within the Soroban ecosystem.
Excited about that.
Yeah.
Awesome. Thank you.
So in our case, we're building a cash flow financing protocol. And for those who don't know, how that works, is essentially that the borrower repays the loan based on the future cash flows that they earn. And I think that I wanted to give you an idea of why this specific project. Even though we are based in Europe, we're focusing in Latin America and the Caribbean, and specifically on Cuba. Cuba is a very difficult country, which many of you might know, has been sanctioned and all that, and you still have a private sector which is booming at this moment, and there is no infrastructure whatsoever to get any loan. So you are a private entity, you need essentially financing for your projects, but you cannot get that. Our idea, and this is something that in Latin America is kind of in use, that if you cannot have access to traditional finance, you can essentially repay it or get loans based on the future cash flows that you will receive. And this is the idea that has helped us to define a solution that was burned based on the necessity from the Cubans. So that's it.
So the real world yields have skyrocketed over the past few months, and the reason, of course, is central bankers trying to fight inflation. It is estimated that the rates are going to be higher for longer. And right now, you can actually lend to US government and earn 5.5% on a very short maturity, like less than 30 days. So having been a trader in DeFi, I know that it's very difficult for DeFi to attract capital while the risk-free rate is so high. So what we are trying to build is essentially tokenize T-bill fund that allows accredited investors and businesses to essentially earn that yield. And so that it can be composed and be programmable, we are building a repo lending protocol where these investors can then use those treasury bills to borrow stables against them. And this is very similar to repo in real world, where you have treasury-like assets and you have short-term funding needs. So essentially use those treasury assets to borrow dollars to satisfy your short-term funding needs. So it could be an OTC desk, for example, that's holding a lot of US dollars for settlement reasons. So they could essentially buy those treasury tokens, which make them 5% yield right now. And if they have a short-term funding need for, let's say, for settlement with a client, they could just use those tokens and borrow USDC against it. And now, of course, given they have a yield-generating collateral, they would be willing to pay a higher rate to the lender. So if you are a non-accredited person holding USDC, you can actually go to that pool and access some of that yield.
Yeah, I mean, tokenization is the talk of the town, but we can get into that in a little bit. So in DeFi, right, we talk a lot about financial primitives. So how do you see your projects as being a primitive for the Soroban ecosystem, especially when it comes to liquidity and growth?
I can start first. I think if you look at any other ecosystem out there, you will find out that lending protocols is kind of central use case for DeFi, and most of the lending protocols are actually among top projects, TVL-wise, right? And like, let's say, Ethereum, Aave number 3 right now, or Radiant on Arbitrum, which is like number 2 or number 3 right now. I can't remember the exact kind of line. But anyways, so I think that obviously lending is crucially important for lubricating like DeFi mechanisms within any ecosystem you can think of. And obviously Soroban is not an exemption here, so we definitely need to to focus on lending primitives and to have them in order to make the ecosystem succeed.
Yeah, for sure. I mean, increasing circulating supply.
For sure, yes.
Yeah, in our case, I would say that, you know, when you look at a country like Cuba in this case, when you don't have banking infrastructure at all, or when you don't have access to the external financial system, DeFi becomes a very important, maybe the only solution that you can use to help the development of the people there. So then it's about, you know, you don't have a banking infrastructure, what do you do, right? So, and lending becomes kind of the second, I would say, most important thing, because you start first, of course, with the payments, because people need to get money and so on, but then when you want to grow your business and you might need some extra financing, you need lending. And well, if you don't have a banking infrastructure, something to support that, you know, DeFi becomes a key important thing. And I think that if you look at countries like Cuba, DeFi is, in my opinion, something that is really promising, mainly to put money on the hands of the Cuban people. So
yeah, exactly. Provides financial access, which is a huge driver of what we do at Stellar. Amit?
Yeah, so I think we are essentially bringing the real world risk-free rate to DeFi, which in my view is going to be very important, because if somebody is, let's say, holding US dollars for some reason, I mean, you could be on LPing on an AMM, or you're holding the assets on a lending protocol, you would not want to miss the 5% yield that you could make by lending to US government. And the difficulty with, you know, DeFi applications is that they cannot pay that yield just by being native to DeFi. So we think this is a primitive which is essentially allows the builders to get that yield in a natural manner. So if you integrate this tokenized T-bill into your protocol, or a yield-generating stablecoin, which is a slight variation of this product that we are also building, then you can essentially not worry about, you know, earning that 5% from US government and just focus on the DeFi part, because, you know, that yield is essentially accruing to the dollars held on chain in a natural manner. USDC, whereas, would be used as an onboarding and offboarding mechanism, but we think that, you know, this kind of derivative of USDC would be useful in enhancing the yield that people can generate on basically top of their assets in DeFi.
Yeah, I mean, all very good points. Alexi, I know you've been deep within the Stellar ecosystem, right? And you're super excited that Soroban will be launching soon. So tell us about how that complements your existing project.
Yes, this is something that I have been waiting for a very long time, I would say. I mean, and I think that a lot of folks that have been for some time with Stellar are really excited about this. In our case, you know, we are building this specific ecosystem to try to bring financial inclusion to Cubans. So we started with a wallet, non-custodial wallet, where people, the Cubans living outside Cuba, could send, you know, money to their relatives in Cuba, and in a peer-to-peer way. Because I'm originally from Cuba, but I have been living in the Netherlands for like 15 years already, and I always struggle finding a way to send money to Cuba. So the idea came, okay, let's then develop a wallet so that the people can just get the money there. And then, of course, the second step is about, you know, you think about, okay, you have the digital assets in your hands, in your phone, but what do you do then with that, right? So you need to have access to services that you need in your day-to-day needs. And then we then thought about, okay, you know, let's try to provide services that the Cubans need so that you can buy, for instance, food with your...
Actually use it.
Yeah. But then the next step was about thinking about the private sector, right? So we have also an enterprise solution that we are planning to launch in Q1 next year. And the whole idea is, you know, we put now also the digital assets on the hands of the private sector. So you have an additional service to a wallet user. You can go to a restaurant and then you can pay just with a digital asset as well. Now, and then the whole evolution comes then to lending and borrowing. So then you have the merchant that needs financing. So you can, show already the traceability and in a very transparent way, that the future cash flows that you will receive based on your business, you can use that as some sort of security, right, to lend money, to borrow money. So that's the whole idea of the whole ecosystem and how we have evolved from a wallet to think, this idea from a wallet to a product for private sector in Cuba, and then of course giving them also the possibility.
Yeah, for sure. I think it's absolutely needed.
Yeah. So this is a whole circle that eventually is going to be closed.
For sure. No, that's really awesome. So I know some of you have been building in other ecosystems. I'm looking at you, Alex. Tell us about some of the thoughts that you had, right? The considerations that drew you on to building on Soroban.
Yeah, definitely. We had the experience in building various ecosystems. As I mentioned previously, we've been building on Polkadot, for example. When you were starting building on the new ecosystems, specifically on that one, which is just kicking off, it presents certain interesting opportunities for builders. First of all, because it's always fun because you're just establishing these connections within the ecosystem which never been worked out yet, and you're basically building new kind of business relations, new partnerships, onboarding new projects, and so on and so forth. Specifically, when it comes to our engagements within the Soroban ecosystem, what actually excites me personally that we've been always looking at DeFi as some kind of set of primitives and functionality which is relevant to more sophisticated sort of degens who are just doing some complex stuff. But Stellar is more kind of retail-focused ecosystem from my perspective, and actually the access to these end users who actually do payment things and actually use blockchain for more retail use cases. It's something that really fascinating for us, and we would love to find our feet into these kind of vibrant mechanics around these retail users. So in general, like just short adoption. So I think that adoption is something that will help Soroban ecosystem sustain, and actually something that we can obtain through building on Soroban ecosystem being interconnected with the Stellar ecosystem.
Yeah, for sure. I mean, and also that ties into just like Stellar as a base, right, with all the on and off ramps that we have as well.
Sure.
Yeah, for sure. And Amit, I have to ask you, because I know you talked about the rates. So given the current economic conditions, right, generally higher inflation, narrowing gap in yields between DeFi native assets and real world assets, how does that impact your project now? And then my second question to that is, well, what if the rates retreat?
Yeah. So, I mean, DeFi TVL peaked in December 2021. And that was kind of correlated with, prior to that, cost of borrowing money was very low. Real world interest rates were very low. So, people could borrow very cheap, and they were chasing yields all over the place. So stocks were going up, Bitcoin was going up, and DeFi yields were going up because people were being paid in tokens, which were going up, highly correlated with the rest of the market. But once smart money, which is the institutional people, realized that inflation has got out of hand and central banks will start raising rates, they started pulling that money out. And we were seeing that, happen to Anchor Protocol in April. And that actually caused Terra Luna collapse. And then consequently, we have seen what happened. Of course, later you had FTX fraud and so on. But the primary driver of that collapse was essentially the rates going up because of inflation. So now we are, of course, aligned with the current macroeconomic system where we believe that treasury yields going to stay at an elevated level for foreseeable future. And we are hoping that this would bring more real-world assets on-chain because, it's like a gateway thing. Tokenized treasury is the gateway drug. So people get used to it, they become comfortable, and that brings, more riskier assets such as private credit on blockchain. And once basically rates go down to zero, there would, be these assets like private credit, which would still be providing decent yield. So that's why we are not aiming to just build one product, but as a financial, act more like a financial institution and look at multiple products which will kind of have, positive utility in different macroeconomic environment. So, when rates go down, we will be ready for that as well.
No, makes sense. Very, very interesting. So let's look into the future a little bit. So if you had a crystal globe and a wish list, how do you see the Soroban ecosystem evolving over the next 1 to 3 years?
Oh, I can start with that. I think that the good thing about Soroban is that we have had the opportunity to see the different other smart contract platforms, right? So I think that with Soroban, the folks that are working really hard to bring it live, they had the opportunity to see, what is not going well in that specific platform, And I think that my hope is that based on that, the ecosystem will be able to attract some of the developers that are working on the other smart contract platforms, and eventually, I think that everyone hopes that, that everyone is going to be on Soroban. And I think that also the complement between the Stellar Classic and Soroban and the whole idea of the fees is very important as well when you are developing the smart contract. So I see a lot of activity. That's what I expect to see as well.
I hope you're right.
Right. Yeah. So I'll go ahead. Right. So, great thing about Soroban and Stellar is that here I'm meeting people who are not just NFT folks. So, people with real-world focus on trying to solve real-world problems. And I think given that Soroban, like you mentioned, is building now as a smart contract platform, you can learn from what others have done. But ultimately, I would love to see more real-world assets on-chain using Soroban ecosystem and the partners. And cross-chain operability is also very important because, when the bull market hits, the assets on other chains would actually skyrocket in value. So it would be good to have cross-chain interoperability, and not through the bridges like Ronin, where people just get hacked, but in a more, I would say, safe manner. I also think that for institutional DeFi, which is our focus, it's important to maybe use zero-knowledge proofs to allow people to verify their identity without exposing too much of their personal information. Privacy pools, another important concept in Ethereum space right now, where essentially you can prove to an authority that your money did not come from a sanctioned wallet. These are very important, and because you're still building it, important to consider those, because this is what is going to attract more institutional capital to the DeFi ecosystem on Soroban.
Yeah, for sure. Alex?
My 2 cents here, I hope that, of course, like if we don't talk like tens of billions of TVL or something like that in a few years from now, or something more digital, I would say, like in general, I would expect Soroban be as much recognizable out there as, I don't know, MoneyGram, for example, right? So it could derive like thousands of users who will be interacting with each other and being the parts of the global financial system at the end of the day.
Yeah, I hope all of your predictions are correct, and I guess we all have a role to play in this, everyone in this room. So just before we wrap up, because I think I got the signal from someone, we're going to do a quick fire round of questions. And so we give me one-word answers, and I'll ask you the question. Are you ready? Okay.
Ready.
The future of DeFi is ... Permission or permissionless? All of you can answer.
Permissionless.
Both.
Both.
Oh, okay. All right, next one.
That's also true.
Is it going to be driven by institutional adoption or retail dominated?
I think that it starts, in my opinion, by retail, and when there is enough volume, institutions.
One word.
Oh, sorry. Retail.
Okay.
I would say institutional, actually.
Institutional.
Yeah.
Okay, interesting. Last one. Is it going to be over collateralized or under collateralized?
Under collateralized.
Both.
Both.
Interesting. Okay, so it sounds like we can continue the conversation, but we have to wrap up. Thank you so much for being here. Thank you, everyone in the room, for being here as well. And more importantly, thanks for playing such a critical part in the Sorbonne ecosystem.
Thanks.
All right.
Thank you.
Thanks, everyone.